This report brought to you by the Richmond Club, where investors and high-growth companies meet.
Thanks, Judson. Our next speaker is the President and CEO of DeepSouth Resources. Please welcome Mr. Pierre Laval.
Thank you. I'm pleased to present today for the first time at Richmond Club also. So now you know where to invest in zinc, you know where to invest in gold, so I'll tell you where to invest in copper. Too quick. It works so well that it goes too fast. We're a TSX Venture listed company, fairly recently listed. It's 2 years ago, but our shareholding structure and our acquisition have been completed in May 2017. Our largest shareholder is Teck Resources with 35% of the shareholding, plus management means the chairman, myself, and our VP Exploration, we hold about 20%. You will see that we have a seasoned and renowned technical and management team. Our flagship project is called Hybe Copper. It's in Namibia, so completely in the south of Africa. It's a large tonnage, low-grade deposit. We're arriving at PFS stage. We also had recently a very, in fact, we just announced yesterday that we got the approval from TSX to close that deal. We're moving into an exploration project in Turkey. It has a large potential for, it's a very good exploration target. That was missing a little bit into our portfolio. So we're in stable and mining-friendly countries, and we have a very good backup from our main shareholder, who is also based in Turkey. So we are strongly undervalued. We're trading at about 1% of our PEA value of 895 million. Our peers are trading to 6 to 8% of their PEA value. One of the main reasons for that is because after we listed, you will see the project was there with all the drilling done. We've never done drilling ourselves on the project. So we came out with a listing, and the first thing we did was a resource estimation and a PEA. So the upside potential was a little bit limited at that point. But because it's in copper, because it's based on the electrification of transport, there's a strong upside potential, plus with the new Turkey project we just added. So the project in Namibia has shown 5 billion pounds of copper in the ground. The PEA has a pre-tax NPV of 895 million. The IRR is 30.4% at a discount rate of 7.5%. We're currently planning a PFS to start that in 2019. Teck has delineated in their past work three higher grade areas where you will see that the grade are pretty more important than what we have in the overall project. In the case of the Kapili Tepe project in Turkey, it's drill ready. It has been explored by Falcon Bridge Noranda in early 2000, and we mainly go with their targets, their drilling targets. The reason why they left the property was because of the merge they had at the time, and they left over about 50% of their project worldwide. It was one of it was the only project they were having in Turkey. So I will not spend too much time on the CVs of everyone, but we have between 15 and 40 years of experience in Africa. Myself, I'm dealing only in Africa since 1996. Prior to that, I was an investment banker in Montreal, so my background is finance, but specifically, I've worked only in mining. Our chairman, John Akwanye, is a retired lawyer in Namibia. He's also, he was chairman of the National Airport Corporation, named there by the president of the country. He's on the Land Resettlement Board, where he has been named there by the president of the country. So he is a very well-established person in Namibia. That's a quick comparable to some of our peers. I've chosen a very limited number because they are the ones that have projects that are mostly similar to what we have. when we do a list of peers, sometimes it's difficult to compare because the projects are not having all the same the same geological features. So what you can see is that we're trading at about 1 cent per pound of copper in the ground, when our peers are trading at mostly 3 cents per pound of copper in the ground. So we're about at 1/3 of their value. And the main reason, as I said, is because we have not done any drilling where we were able to increase the shareholders' value. We just came in the market, and the first thing we've done, it's a PEA. So we still have work to do on our promotion. You will see that our average grade is 0.31%, and some people will say that it's pretty low, and that could be true. But when we look at the grades of all the copper projects in the world at the moment, the production grades are at 0.53%, developing mines at 0.39%, but when you go at pre-feasibility project, they're all at 0.35%. In our case, if we add the molybdenum in our estimation, we will have a 0.35% copper equivalent, so it means that we're right in the ballpark of what you find in the market in general. I don't think I have to make a big presentation about the copper market. Everybody knows that it's with the electrification of transport and all the infrastructure projects in the world, copper is in shortage, so at some point in time it will just turn around and gives a better value than what we see now. And even with what we've seen last summer with all that commercial war, the price of commodities went down, but we can see that there's a good way to get it back up again, because the demand is still increasing, and it will be like this for the next at least 10 years. That's the main resource at Hybe. What you can see is all the drilling that has been done there, mostly by Rio Tinto in the 1970s and Teck in the 2010 to 2015. We're sitting on about a little bit over 5 billion pounds of copper. It's open-ended at surface, but it's open-ended also below. As you can see, the indicated resource goes down to 240 meters from surface, and the inferred goes down to 350 meters from surface. Teck has drilled down a couple of holes going down to 800 meters, and at 800 meters it's still mineralized, and between 350 and 500 meters the grade is going up. So it's not something that we will address in the next coming years, because it's already 5 billion pounds of copper near surface, so there's no reason for us to continue to drill deeper. But what we know is that there's a huge potential to increase the tonnage there and make a mine that will last nearly forever. So that's the core shack that we have inherited mainly by Rio Tinto's work. What you can see there is that we have 66,000 meters of drilling, 196 cores, all on site, well preserved, in very good condition, so it has been very useful to do a resource estimation. Part of that has been drilled by Teck in the recent years. What is very important, we've completed a PEA based on leaching. And this project, even if it's mainly sulfide, reacts very well to heap leaching. But to increase the time of leaching, to have a better return, we have to use bioreactors in the leaching. Some people are saying, yeah, but biotechnologies, it's a pretty funny industry. It's not the case, because it's existing mainly in Chile since 1991, and there's several large mines from Codelco, BHP, and others that are using biotechnologies. And what a metallurgist recently said to us is that people tend to forget that in sulfuric acid, there's always bacteria. There's always a biological reaction that goes with the sulfide. The only thing we do is that we add more bacteria into it to speed up the extraction process. That's the PEA that we've put together. At $3 per pound of copper, what you can see is that the capex is just a little bit over 200 million Canadian. That's for a 8 million tons per annum treatment. We can upgrade that to 20 million tons per annum. The reason why it was not in the PEA at the time is because we were not completely certain of the excess of water. Because in that part of the world it's pretty dry, but we're just 15 kilometers from a main river, but we were not sure if we were able to access all the water we need. At 8 million tons per annum, it's fine. 20 million tons per annum, it has been recently confirmed by the Ministry of Environment that we can go at least to that size of operation. So that's the numbers we have there. Even at its 55 years life of mine, if we go to 20 million tons per annum, it will go down to 24 years. But as I showed you, it's open-ended, so that project will probably have a 100 years lifetime anyway, one way or the other, because it's mineralized all over the place. That's the typical bio-assisted heap leaching. It's a typical heap leaching project. That's the $200 million US concept. Okay. What is very important is the infrastructures. Right. That's the south of Namibia, that's South Africa here. The white line that you see there is the Orange River, which makes the borders between the two countries. And our project is sitting at 15 kilometers of the river. That's where we will get all the water we need. The main road from Cape Town, South Africa, going to crossing nearly all Africa is crossing here just by our project. There's power lines at about 35 kilometers east there. There's railroads about 100 kilometers to the north, so it's a little bit far, but we can bring some, it's pretty flat in that area just before arriving to the project. So you know, the government has mentioned many times in the past that they were very open to reorganize the transportation for us in that area. So infrastructure-wise, it's extremely well situated, mainly also because we have access to water. That's the work that has been completed by Teck in the past 5 years before we finalize and change the shareholding of the project and our company. One of the main things that I want to point out is that Teck has drilled some very interesting drill holes that you see 120 meter at 0.50% copper, another 45 at 0.53, 32 meters at 0.79, and so on. These areas are near surface and they will have an influence on the future resource estimation we will have. They will also have an influence on the grade that we will in the future estimate with the resource, but also they will help us because there's 3 areas where you see these higher grade zone that will help us to get started the mining on these specific pits, and it will reduce the life of mine by at least not the life of mine, it will reduce the payback by at least 1 year. So from the numbers of the PEA. That's the deposit from the surface, and you can see here all the red dots are the areas where Teck have drilled over 0.50%, and we see that there is 3 main pits here. That's the 3 pits where we will start the mining, and then we can reduce the payback period and certainly have a better return. All the numbers we've seen at the PEA will be increased, so the IRR will go high and go higher and so on. And the main reason why it's not reflected so well in the PEA is because we need to drill again in these areas to ramp up this part of inferred resource to indicated resource. The PEA is built only on the indicated resource. Also on that project, that's the main deposit in the center here. You can see that Teck has defined 5 satellites. So when I was saying it was open-ended up at surface, it means that we can increase the resource substantially at surface also. But as I said, it's already 5 billion pounds of copper. So there is no reason for us to carry on and developing other resources around. We must develop the first that we have. Just go a little bit quicker on this one. So we're planning a PFS. The first thing that we will have to do is a metallurgical test work on an industrial scale to show that the bio-assisted leaching is working well. It has been shown on in laboratory scale that we were having recovery rates of 93%. So what many mining companies that have talked to us about that, private equity funds also have looked at it, and they all want to see us doing this industrial scale test. If we do that and it's successful at the same rate of success than what we've seen on the lab scale test, then it's open up. Now, it's for sure that it will attract interest a lot more. So that's where we stand now. It's an expense of about $500,000 for 4 months of work, and when that will be completed, we will start the PFS. So it means drilling more in the high-grade areas to better delineate these areas, and also to ramp up the resource in general from indicated to measured, and potentially to reserve, probable reserves. Very briefly, that's the project we have in Turkey. What is very important is that I would like to show you that it's on the West Indian Belt, which is very well known as one of the most important belt in the world for gold and copper. There's a lot of good discoveries in these areas and very, very large deposits. Two zones are pretty sizable. We're talking about 4,500 meters long and 1,500 meters large. I'll just go quick to some results. We see that selected sampling from Falcon Bridge are showing very important, large, high-grade copper grades. We see on channel sampling also 1.04% and 2% copper. We have seen also some pretty decent cobalt and nickel grades in some areas. That's some drilling that has been done by previous companies. You can see that the extension are pretty large, pretty interesting, and the grades are all over 0.50% all the time. So where we are at with this is the drill-ready target, and when we will start drilling, then we should necessarily, what we have there is a very large target with a lot of different exploration programs that are showing that it's mineralized all over the place. Now what we have to do is start delineating a resource from that point. So that's about it. So that's the reason why you should look at it. It's very undervalued, and with the work that we're planning for 2019, this should change. We're just really starting to make promotion about it, so we expect that 2019 will be a very good year for us. Thank you very much.
This report brought to you by the Richmond Club, where investors and high-growth companies meet.